Do you think our current market condition is reason to panic or reason to get excited? This is Simply Financial, where you can stop worrying, start planning so you can live your life better. I get it. We all want the market to go way up, and we want to make more money than we could ever dream possible. But that's not always going to be easy, right? There's always going to be times where we have a lot of market conditions and environments around us that make things super difficult. And that's what's happening right now. In the words of Warren Buffett, we kind of have a 1-2 market punch coming at us right now in the coronavirus, and then what's going on overseas with oil prices. And that's really pulled down our market. And it makes me think of the Rocky movies. And if you've ever watched any one of those, which I have recently with my kids.
And the champion again with combination of left and right to the head.
Rocky seems to get beat up so badly, and you're watching it going, when is this gonna stop? There's no way he can take all of that and still win. And yet he does.
Rocky Balboa has shocked the world. He is the new heavyweight champion of the world.
You know what? It got me thinking about our portfolio and the design that we have for income. And our portfolio's design is to really focus on dividend income. And there's not so much of a concern for market volatility. And that's being tested right now. We're seeing a tremendous amount of market stress and market volatility on our stocks inside of our portfolio. So what I'm going to show you is an account statement from a client of ours. Now, we've hidden a lot of information about this, so you're not going to know who they are. But one thing that remains true is the values that I'm going to talk about and the dividends that I'm going to talk about, you can get whether you're a client of ours or not. So what we're going to go over is fact. It's history. It's what's happened over the last 14 months. But the realities are, you too can be in the same situation, but if you're our clients, this is your situation. And I'm going to show you a statement from Charles Schwab that's actually going to show the beginning balance of 2019 in January. We had an account balance of $1,769,000. And if you look a little bit further in the statement, what you're going to find is that they're going to pay out $100,404 for all of 2019. Now, what I'm not going to show you is that this particular client took out about $100,000 in income, not the dividend, just account value over last year. Now in 2020, to start this year, what you're going to see is that account value was $1,928,000, totaling a dividend of $100,943,000. Now here's where the panic sets in, and we're going to look at the next statement, which was February of this year. And what I'm not proud to show you, but is reality of what happens in the market, is that they lost a lot of money, and that account balance is $1,754,000 and change. Now here's where I want the drum roll, because right now I'm going to show you the dividend, and we're looking at a market stress test that's phenomenal. This is horrible. This is scary. And the account values from its peak to where it is presently are down huge. And what you're going to notice if you look deep in these statements is that the dividend didn't drop the same as the value. The dividend didn't just stay at $100,000, but in February of this year, it's at $102,000 on that statement. And that's wonderful news, because not only do we not have to associate the account value with the dividend, but we get to sit back and relax on the confidence that we know that our dividend value is controlled differently than our account value. And as much as we don't like what's happening right now in the environment with this health scare and with what's going on with oil prices, we can be confident in the fact that our dividend has remained completely untouched through all of it. And not only has it been untouched, it's actually gone up in spite of it. And that's very good news. So since we talked about the 1-2 punch that's pulled our economy down, let's talk about the 1-2 punch that's going to get you excited. The first was the dividend income, which I just talked about. The next one is, how does the market respond? We've got this Rocky mentality of what dividends can do in the market and how it can recover, and you can feel your dividend income stay the same, yet watch your account value go down. But how does the market rebound? What's the market mentality in times like this? And if you look over the last 40 years in the market, going all the way back into the 80s, what you're going to notice is that every single year, going back to 1980, the market has dropped at some point in that year, -3 to -48%. Every single year. Over the last 40 years, the market has declined at least 3%, up to or down to 48% in a given year. And every single time that that's happened, the market has only stayed down 7 of those times. I mean, there's been some huge years in there. If you look at 1987 on this chart, what you're gonna notice is the market had bottomed out at a 30% loss, only to end up at a 5% gain. And if you look at our environment today in 2020, it mirrors a lot of what took place in 1987. But the difference in 1987 is that was a financial crisis. And today, in the words of Warren Buffett, this is not a financial crisis. The leaders in Washington are stating this is not a financial crisis. This is an opportunity of a bizarre market that's pulled down, but it should not necessarily stay down. I'm not gonna be quoted on that, but I don't know what the future is gonna hold. But the one thing I do know is that what's taking place when it does recover, it should recover really in a great way. So you have 2 opportunities staring you in the face right now. The first one's kind of selfish because the market has been pulled back so much that you have this huge opportunity to invest at really old prices. Some of the stocks in our portfolio have gone down quite a bit, but their dividend remains strong, which means they're great companies. They're financially stable. It's a little scary right now. I understand that, but there's a lot of opportunity. That's the first one. The second one is a little bit more selfless in the sense that not everybody's sitting in the situation you are, where they can count on their income being provided for and knowing that they actually don't even need to sell or do anything. There's no reason to panic. There's definitely plenty of reason to be scared, but there's no reason to be panicked. And how many people do you have in your life that don't have what you have financially, meaning they're not invested the same way? This is by no means a call for referrals. This is by every sense of the situation a call for help by people who really need it right now. They need to be educated. They need to be empowered to understand that there's other ways to invest. And that might rely on you having the ability to go and talk to them. Now, if you want to send them our way, we'd love that. But if not, you take the initiative to go chat with them and let them know that there are other alternatives. And the worst thing that they could do right now is probably panic financially. Because emotionally, we're all there. We're all worried. But financially, I'm not so sure there's any reason to panic at this particular moment. Me, personally, pretty excited about the opportunities that we have right in front of us right now, okay? So hopefully you learned a little bit today. Again, Simply Financial, where you can stop worrying, start planning so you can live your life better. Subscribe to our channel today and you too can be legend, wait for it, dairy.